Hello, this is Matt on the Moon Family Sedan channel, and my fellow XRP holders. I think we're at the point where things are probably about to get really, really fun. And of course, obviously, we've got the conclusion of the SEC v. Ripple case, unless, little asterisks, there's something that would result in appeals ultimately, which makes this drag on for years. Oh, please don't let that happen. But setting that aside, assuming we get some sort of positive outcome here, wow, could really be off to the races in terms of XRP price appreciation. And I think we're all speculating on that, right? And that's one of the things that we're considering, is that even if Ripple loses, as long as there's a path forward in the United States for XRP, XRP goes on a tear. So we've got that to look forward to. But in addition to that, what's more probable than not, although admittedly not certain, is that we're in the beginning stages of a bull market. It's just hard to know it, when you're living in the moment, because let's think back to the previous market cycle. You saw the Bitcoin bottom December 15th, 2018 at about $3,200. Well, you didn't know the following day for sure that you were actually at the beginning of a bull market. And I think we're in a similar position right now. But this is why things are at a phase where it's going to get potentially real fun or real fast, relatively speaking, of course. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice. And you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Now, I know that we had a red day yesterday, but I think we know why, and it's not a big deal. Now, as I'm recording this, mind you, XRP is at 40 cents, Bitcoin's at $22,920. Market cap for the asset class still over $1 trillion, and Bitcoin dominance at 41.77%. So, even despite the downward price action yesterday, actually, honestly, we pretty well recovered from it. Well, XRP has anyway. Bitcoin hasn't quite as much. But if you look here, here's for those of you who care to look, this is a 24-hour XRP chart. It's like, looks about the same. For Bitcoin, it's slightly recovered. It's not all the way back up to where it was, but still. And here's the crypto fear and greed index. Despite that pullback, still at 51 out of 100, so no longer in greed. It was at 61 out of 100 yesterday, so market participants literally back into greed yesterday, but still at 51 out of 100, that's still neutral. So what actually prompted all this? Well, here's a headline from Decrypt, which I think pretty well nails it. Bitcoin, Ethereum prices fall as market braces for more Fed rate hikes. And this is the thing, folks, that I've been saying. Even though on the surface, somebody not into crypto might think, how could this possibly impact crypto directly? Well, it does. And the reason is, and I like that the author of this article recognizes this, crypto moves in tandem with stocks. And stocks react to what happens in terms of quantitative easing or tightening with the Fed. So anyway, piece reads as follows. Bitcoin has dropped, taking the rest of the crypto market with it, as traders de-risked ahead of the Federal Reserve's Wednesday announcement, where the central bank is expected to continue to hike interest rates. So I was paused to note, I don't think that we're going to see them stop hiking interest rates when the news breaks tomorrow. We'll see what they have to say. But it's a possibility that you could see a lower increase than what we previously saw. And this article, that's why I think that this article pretty well nails it. Let me scroll down a little bit. I don't need to cover literally the whole thing. Here we go. Check out this. The crypto market is following U.S. equities, as it typically does. And I'm always highlighting that. They nailed it here. And stocks have been hit hard today. The S&P 500 is down 45 points, or 1.1% to 4,025. The tech-heavy NASDAQ has dropped 198 points, or 1.7% to 11,423. So again, the fact that crypto went down today has nothing to do with anything specific to crypto, has nothing to do with long-term viability of any cryptocurrency, not Bitcoin, not XRP, doesn't matter. The asset class moves in tandem. And so that's why it's so worthwhile to be aware of these things, because you don't need to be scared when stuff like this happens. It is what it is. Nothing goes up in a straight line forever. And crypto markets really good at absolutely scaring the hell out of humans and causing them to panic sell to their own financial demise. Historically, that's just what these markets have done. But on the flip side, there has always been, and still, I firmly believe, continues to be, that very real opportunity for the everyday person to achieve life-changing wealth in a way that has never been possible before. So it's not like there's no risk. Of course there is. But to recognize the opportunity is real too. Anyway, piece continues. Traders are shifting risky assets because the Federal Reserve is this week expected to continue its aggressive monetary policy in order to get inflation under control in the United States. The Fed last year raised interest rates 7 times, making risky assets that can be volatile, like Bitcoin or tech stocks, less attractive. Investors instead retreated to greenbacks, and today the US dollar experienced gains. The US dollar index was up 0.32% Monday. Well, wouldn't you know it? Wouldn't you know it? It's good for the dollar and everything else went down. It's pretty clear to see what's going on here, right, guys? Piece continues. America's central bank started off last year aggressively upping interest rates by 75 basis points 4 times. But it then slowed down by raising rates by only 50 basis points. Yeah, so that I was pausing note. That was as of last month, the most recent meeting. And these meetings are multi-day events. So actually, it technically started yesterday, and I guess it just goes through today. And then the announcement, presumably, like they reported here, would be made on Wednesday. Anyway, piece continues. Market analysts expect an even smaller increase this time around, with most predicting a rate hike of 25 basis points. Higher interest rates make borrowing more costly and mean that people eventually spend less. Yeah, so I don't pretend to know what the hike's going to be. I'd be shocked if there weren't a hike. I'd truly be shocked if they went from 50 basis points to, yeah, everything's fine now. I don't think that's the pivot some people are actually thinking might happen, or just, okay, great. I don't think that's happening. I'd be very shocked. So I don't know if it's going to be 50 basis points or 25 basis points, but probably one of those. And honestly, even if you're still hiking interest rates, if it's going in that direction and still 25 basis points, I don't know why the market would see that as a negative. If anything, that should be a positive heading in the right direction. So we'll see here. Then there was this chart, just a Bitcoin price chart shared by chart analyst Income Sharks, who wrote the following. And he's got the right mindset, that's for damn sure. It says, Bitcoin, one red candle doesn't undo 30 days of up-only price action. I'm only in shorts to hedge my longs and spot. I can't wait to close them and write up another long with those profits. We still haven't even broken major support. Yeah, so some of the bears came back out on social media just a little bit. They thought it was okay to stop hibernating. But it's one day after a month of almost nothing but positive upward price action. And then there was also this from chart analyst Kaleo, who wrote, Bitcoin. Something like this makes sense. And you can see that even though we just had this down action, he's showing in terms of what to expect in the near term, especially over even the next week. He's thinking that Bitcoin's going to be surpassing $25,000. So not going to necessarily, if he's right, not going to have to wait that much longer to see some of that seriously positive price action. And then I also wanted to mention, there's no shortage of financial fools out there who are famous and they're alleged gurus, but don't know what they're talking about, that have claimed that the reason we've seen price action for Bitcoin and crypto at large to the upside is due to manipulation. You've seen that from the likes of Peter Schiff. You've seen that from Jim Cramer, who says that XRP is a giant con. That's a quote. These people are fake gurus who don't know what the hell they're talking about when it comes to this stuff. They absolutely are clueless and don't especially in the case of Jim Cramer. He literally doesn't know. He hasn't even researched. He's evidenced by the stupid words that come out of his mouth that he doesn't know what he's talking about, hasn't researched it, but he sure has some strong opinions that he shares with tons of people, right? And so manipulation. So the reason that Bitcoin went up and everything else followed, because it all moves in tandem, due to manipulation. Okay, is that right? Well, then explain this chart. This chart is shared by analyst Will Clemente. It's regarding Bitcoin's hash rate, the computational power of the entire Bitcoin network, the entire Bitcoin blockchain. And here's what Will Clemente had to say. Bitcoin's hash rate is on an absolute tear right now. Not only is the absolute value at all-time highs, but this is also the most aggressive 30-day increase ever. But hey, it's just manipulation. That's what Jim Cramer says, right? Oh my God, I can't believe people actually respect the opinions of that damn fool. He does not know what the hell he's talking about here. And so this is just one on-chain metric that you can look at and say, well, this sure doesn't look like manipulation. It looks like an actual network behaving in a way that, given the prices that we've seen, shouldn't be that surprising. Shouldn't be that surprising at all. It's not like they're just a few very large transactions and that manipulated the price somehow in a particular direction. Look at the computing power of the blockchain. Freaking Jim Cramer. What a damn fool. Ain't nobody got no damn time for that. And then there's this from the Daily Huddle. So despite the negative price action that we saw yesterday, I don't think it's going to matter. In fact, if there's good news after the Fed meeting, after the announcement's made tomorrow, well, you could be off to the races again anyways. But look at this headline from the Daily Huddle, because look at what's happened recently. The headline is, institutions pour capital into Bitcoin at highest rate since July of last year. Well, how about that? Or is that manipulation too, Jim Cramer? Is that manipulation? With XRP the giant con? And again, so even though XRP is unquestionably, for a ton of reasons, my very favorite cryptocurrency, happens to be my largest crypto holding, so it's the one for tons of reasons that I'm most interested in. Bitcoin's leading the market. I'm still happy to see it. I've been a Bitcoin holder since November of 2017, and this is what you should expect and we should desire, is Bitcoin, money flows into Bitcoin, and then ultimately it ends up getting into other large cap coins, and then mid cap coins and small cap, and then rinse and repeat. This is what you expect to see based on historical price action in crypto markets. This is good to see. It's another indication that history's kind of rhyming with itself. That's what I want to see. That's what you should want to see, I think. Anyway, piece reads as follows. Digital assets manager CoinShares says large institutional investors are pouring money into Bitcoin at rates not seen in the last 6 months. In its latest digital asset fund flows weekly report, CoinShares finds that institutional investors are pouring money into the digital asset markets after a long dry spell. Pause. Were we told by all the doomsday people in November after FTX collapsed, oh my God, the institutions, they're never going to be putting money into crypto. We're set back 5 to 10 years. 5 to 10 years, right? How many people did you see say crap like that? To me, it was just silliness. It's not that there's some sort of inherent problem with crypto that was just discovered by institutions. No. It's that there was an outright fraudster, a scammer, who ran a Ponzi scheme, and it collapsed because the SEC didn't do its damn job in sniffing that out, even though SBF was literally meeting with Kim Jong-Gensler in person. So that's the problem. It's so maybe you get some institutions that are, because look, there's enough humans on the planet, you're going to get a little bit of all types of reaction. But in a general sense, is this going to, for 5 to 10 years, set back crypto? No. Maybe there are a few individual firms you could anecdotally point out and be like, yeah, after that, we're not going to move forward. Okay, fine. Find a few that say that, and you can probably find, a few dozen that feel differently for every one that you find that actually has that silly position. And I haven't even seen any that have articulated such a position, but even if you can find one, I'm just saying it's very clear. This is just data. The money's flowing in, folks. Nothing's broken forever. But look at this quote from them. Digital asset investment products saw US $117 million in inflows last week, the largest since July 2022, while total assets under management have risen to US $28 billion, up 43% from their November 2022 lows. The focus was almost entirely on Bitcoin, which saw US $116 million in inflows last week, although there were also minor inflows into short Bitcoin, just 4.4 million, though. End quote. Looks good to me, folks. And this is about what you'd expect. All this silliness from Jim Cramer and all the doomsday sayers, we're set back 5-10 years on crypto because of the FTX. No, that never made any damn sense. And here's increasing quantities of evidence that I can share with you on the Moon Family Sedan channel. And that's what I'm doing, because it's my channel, damn it, and I do what I want. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.